from US markets are not helping the cause. When crude is falling, Indian markets are yet not appreciating. So obviously there is selling, and the selling is largely because of compulsive factors. I mean, when you have a process of derating, it's anyone's guess that, where derating essentially is going to stop. But one sector which is in the process of re-rating is the entire ethanol sector. So anything which has got to do with the ethanol cycle, whether it is machinery or sugar companies or the ancillary sugar industry, I think they should be celebrating right now. So Shishir Joshipura, Managing Director and CEO of Praj Industries, now joins us to take conversation forward. Shishir, welcome back and thank you for joining us. Walk us through the upside which you are feeling or which you are witnessing because of this uptick in the ethanol demand, because our view is that the ethanol cycle is strong and that cycle is back for next couple of years. What is your view? How will that change your business?
Well, very clearly the new national biofuel policy has put the wind in the sail of the ethanol demand and therefore its production, and we are clearly seeing increased level of activities in terms of the 114 projects that have got approved now for the interest subvention scheme under the 1G ethanol production program, and the liberalization of rules for movement of ethanol across the states, and the capacity creation that the government has given a boost through several measures on liberalization of allowing different feedstocks to produce ethanol, setting prices which are very attractive for the sugar company. All these augurs well for future capacity creation for time to come.
Right, Mr. Joshipura, you've been the key 2G, or rather I wanted to understand what have been the key 2G orders in the quarter gone by that have actually helped bolster your revenues, and what kind of orders do you foresee in the pipeline now?
So 2G is a very ambitious program, and it also goes on many fronts, from creating a circular economy, supporting the new technology, finding a very sustainable way of development for ethanol. And the last quarter results that we have shown do not have any significant revenue numbers still streaking in from the 2G business, as these are long-term projects and we are building 3 of them as of now for the 3 big oil marketing companies, and the revenues for these will go forward. The important thing here is that even world over, the 2G technology is beginning to get attention from several governments. Europe is passing the RED II directive, which will make it mandatory for future ethanol production to be on that route. So I think the building blocks that we will learn here will hold us in very, very good stead as we go forward.
You have pretty much adapted to a number of technological supporting systems actually for your plants. Can you tell us more about this and the capex in new tech, and also how that helps cost rationalization, because technology comes cheap, as you know, that's been the case.
So the 2G technology is a very, very new development, and world over there are very few companies that are attempting to convert the 2G technology route on the ethanol. Praj is at the forefront of it, and we are very confident that as we go forward, we will be able to demonstrate that our technology works. Especially the fact that we have very, very deep experience on the 1G side, we believe will be a lot more helpful for us to establish the 2G technology going forward as well.
In order to migrate to this new 2G technology, do you have to make fresh investments?
So let's understand this. So it's not actually migration, in the sense that 1G technology has a different feedstock. The 2G technology has a different feedstock. So depending on the feedstock, one will choose the technology, and both will coexist, as I say. 2, yes, we will have to continue to invest our innovation efforts, our technology development efforts into the 2G field to bring down the capex of the projects as well as the opex, because both these, only when they are driven to a convergence point, that the technology becomes standalone and will not need any help in terms of subsidy, etc., which today in its infancy stage it needs that support.
Give me a sense as to what has happened to your order book after the ethanol policy was announced. What I'm trying to perhaps understand from you is that there is a business as usual which always existed. But post the ethanol policy, are you witnessing or experiencing a serious J curve from some of the sugar companies, from some of the ethanol producers?
Yes, as I was mentioning earlier, the 114 applications that have been approved, some of them have gone into the phase of project finalization, and we are clearly seeing an uptick in our inquiry inflow of the order of 30 to 35%. We are also seeing an order finalization speed picking up, and that is reflected in our order book.
So, Mr. Joshipura, if you had to quantify all that we've just chatted about, tell me what is the order book currently, and what kind of visibility do you see in your order book in, say, the next 1 year? If you could just quantify that.
So we are, as I said, that we are on the Bio 1G segment especially, we are seeing a very good traction of the order of 35-40%, and we expect that as we end the year, we could expect our order book to be reflective of this increase in flow in inquiry, because we have absolutely no intention of reducing our market share, and in fact we are working on plans to increase our footprint within the given opportunity. So we have already seen an increase in order book compared to same time last year of the order of 30-35%, and we will continue to see a similar or a higher traction as we go forward.
Your current capacity utilization, and if demand goes higher, can you service more order with the existing capacity, or you will have to do some capex?
We are very well placed right now in terms of our ability to serve the demand if it comes up, and we are very confident that with our current capacity we will be able to serve this. There may be some balancing capex required, but that's nothing which is out of turn or a long term cycle time basis, so we should be able to manage that in a very, very effortless way.
All right, Mr. Joshipura, we leave it at that. Thanks very much for joining us and giving us those details. We wish you the very best for the future.
Thank you.